get positioned in the metaverse. And what's fascinating about it all is that nobody kind of knows really how this is all going to play out or what this is going to look like. So, so what I might do as an investor, if you're just kind of passively watching all this happen, is maybe I think that that ticker or that ETF METV is a good way to just be positioned to benefit for when the metaverse takes off. And then certain companies, maybe if you like Microsoft, I don't think you can really go wrong buying Microsoft right now, particularly given that Microsoft has been getting its butt kicked over the last couple months. I think it's down the last 3 months. It's been a great long-term investment so far. All right, next question. Catherine, I don't have a question right now. I just joined a little more than a week ago, and I'm now learning my way around your website. Good, Catherine. Well, welcome to the family. Everybody, welcome, Catherine. It's Kathryn. Catherine Serrano. So welcome, Catherine. And if you're in class, I'm glad you're here. All right, so let's see. Next question is from Picola. Picola Brown says Robinhood is not doing good as a stock. So does that mean I should no longer buy fractions of shares through the Robinhood app? Absolutely not. Robinhood may not be performing as a good stock, but Robinhood is still a good company. Make sure you always know the difference between a good stock and a good company. So if somebody is deciding to invest in a stock, you shouldn't sort of say, well, I'm going to invest in that company stock because the company is a good company. That's part of the equation, but that's not the whole equation because some of these stocks are severely overpriced. There are lots of good companies that will make terrible investments, and then sometimes you can invest in a kind of a bad company and make a great investment, right? So think about it like buying a car. If I give you a raggedy car, not a raggedy, let's say a mediocre car, a Toyota Corolla 2012, that's in decent condition, but it's not a super nice car, and I charge you like $500 for it. Well, that's a pretty good investment for you, right? But if I give you a brand new state of the art 2022 Mercedes Benz with cutting edge everything, but I charge you $500,000 for it, you might have overpaid, right? So just remember, what you pay for a stock is not indicative of the value, sorry, scratch that. It's not indicative of whether or not it's a good company. It is a representation of the market value of that company, but market values are fickle. Market values are driven largely by investors and what investors think. All right, let's see here. All right, so I'm gonna jump into some of your questions you guys put in the Q&A section. So Be Back Blackwell says, hello. So for someone like myself who's over 55 and doesn't have a lot of time for these great classes, but would like concise, regular assistance to invest, how do I obtain this sort of consultation? I do want to invest right away, but do not have time for all the classes. Okay, that's a great question and great point. So you can do a couple of things. One, you could if you log in at the blackstockmarketprogram.com in the very beginning, there is a lot. There are very short videos that kind of get you sort of started on the stock market, right? To kind of get you going. Number two, sometimes people I've seen people where they might listen to the classes where they'll play it on their phone and they'll speed up the audio, and they'll listen to it maybe while they're cleaning the house or while they're exercising. That's one of the things I do. I get on my exercise bike because I don't want to get fat, and I will ride my bike while I'm listening to content because I don't have time to sit and necessarily watch a video or read the entire book, but I can listen while I'm doing other things. The third thing you could do is have a passive investing style. So if you go and you invest in something like an S&P 500 spider, which gives you instant diversification, spread you out throughout, the entire economy in a really healthy way, a person can get rich off that. Like literally, there are millionaires out here who became millionaires by consistently investing in, 25 blue chip stocks and just setting their weekly bank balance to automatically deposit, a certain amount of money into these stocks every single week, right? So you can do that with the S&P 500 Spider SPDR. That gives you that spread your money out. Because the two biggest rules of investing actually are hold what you buy and diversify. If you hold what you buy for a long period of time and you spread your money out, you're probably going to do okay if you're consistent. So let's see. Next question is: when investing, buy and hold stocks for 5 to 10 years, do you take profits and reinvest in more stocks, or do you just hold the whole 5 to 10 year cycle before taking profits? Great question. So some of what investors might do is what they call portfolio rebalancing. So portfolio rebalancing might mean that if I have one stock that's just kind of gone to the moon, like it's tripled in value, and suddenly that stock is 30% of my portfolio, well then I might rebalance. That means I might sell some off the top and move that money over. A lot of entrepreneurs go through that when they take their companies public. They realize, oh my God, I'm under diversified. So what they'll do is they will go and they will take some of the money out. They'll sell some stock, and people say, well, why would you sell the stock if you think the company is going to do well? Well, because you don't want all your eggs in one basket. So they'll sell some of the stock, and then next thing you know, they'll be investing in other things. Another real life example of that will be, say, for example, LeBron James. His number one investment has been in basketball and being a great basketball player, right? Keeping his legs healthy and make sure his body's ready and spending time on the basketball court. Well, when he's 40, 45, he won't be a great basketball player anymore like he was when he was 25. So he's been diversifying. He's been taking that basketball money and putting that money toward real estate, putting that money toward making movies, putting that money toward building businesses. And next thing you know, when he retires, he's going to have other streams of income, other avenues of wealth that are spread out across the globe. He won't just have all of his economic fortunes tied up in whether or not he can play basketball. You don't want to be that guy. Like some of these athletes, it's just crazy when they're getting a situation where once they can't play anymore, they go broke because they have no other way of making money. They have no other assets they own other than their body. And the problem with your body is that's what they call human capital. But that's human capital that depletes. It goes bad. So you want to deploy that way. As you make that money from your body, you do what Shaquille O'Neal did, and you spread your money out so that when you're older and you look at Shaq now, he's not what he was when he was in his 20s, but it doesn't matter because now he owns 150 Papa John's franchises and all this other stuff that he's invested in. Right? You have to be an active investor in order to protect your wealth. Michael Jordan, same thing. A lot of guys have done that very well. All right, so let's see here. Ronald Freeman, do you buy more shares of the same stock when the price drops? Ronald, it depends on the stock. If it's a quality company, I'll buy the dip. If it's not quality, I might move my money over somewhere else. Let's see here. Do you invest $5 to $10 a day in the same stock? No, you want to spread your money out. King May, when you buy stocks, how much do you invest for each stock? It depends on what you want to do. There's no rule with that. Akila, even if you have whole term and you are able to take your money from your whole term, I heard you had to pay it back. You know what? I'm not an insurance expert. I know that there are rules involving what you can do with the money and how much you have to pay back and stuff like that. And you could be right. I think it's somewhat complex. So you may want to talk to an insurance agent or somebody that's into that space because I'm not good with rules. I break rules. It's hard for me to remember all of them. Crystal, how do we pick stocks for our children? Let's say we have $500. How should we divide the money? $250 for 2 stocks to add over time, or $100 for 5 stocks? What do you suggest? I think as many stocks as possible. Eventually, you want to get up to where, if you're buying individual stocks, I think you want to get up to where your child has maybe 25 different stocks over time that they have their money spread out in, so they're adequately diversified. But you can also, just jump in and do that with a mutual fund. Like you could literally go into a mutual fund and say, I'm going to buy my child shares of this Vanguard S&P 500 fund every month or whatever, or every week, and I'm going to do it consistently because I want my kids to be rich. I don't want them to be struggling. I don't want them to be broke. So every week, $100 a week in this fund for my child. I will not sell until they're 30, and even then, I probably won't sell then. I'll probably just transfer some of the assets to them if they're not crazy or hooked on crack or out killing people, and I'm going to give them an easy life. If you do that for your child while they're young, I don't care how rich or poor you are, your child will be wealthy, your child will do well, your child would not be in any kind of black struggle. Get your kids out of the damn struggle. Do not put them in a position like your parents might have left you. Okay? All right, let's keep going. And it's not your parents' fault. They loved you, but maybe they just didn't know. But you know. So I hope that you're going to apply that. Crystal Good. You already asked how you pick stocks for your children. There we go. Okay, we answered that. All right, so I'm going to answer 2 more questions, and then we're going to bounce out. I'm actually kind of starving. I got to go get some food. And so for next time, if you didn't get your question answered today, you can actually just log in at theblackstockmarketprogram.com, leave your question for me. I will answer the questions first next week when we have class. B. Blackwell, is it better to invest stocks individually or through a company like Scab or Capital Victory if you don't have a great deal of time to learn all the details about investing in stock? If a company has a good track record of stock selection, It might be worth picking some, picking or letting them kind of manage your money. It depends on the company. I don't know those two companies you mentioned. There are some companies, I know like Merrill Lynch and Bank of America. Like I have a portfolio of Merrill Lynch, and they do come with good stock recommendations that do well, and they've made money for our family. They're also good for like tax advice and stuff like that, like how to minimize your tax bill. With your portfolio, that's a big deal because IRS will just eat through your money once you start making a lot of money. If you're not careful about taxes, they'll just come and just slam you. Let's see. What are your thoughts on Boeing company and stock? Nikki, I don't know much about Boeing, but if you leave the question for next week, just log in at theblackstockmarketprogram.com, put the question in there. I will look up Boeing and I will come back with a recommendation on whether I think Boeing is a buy or a sell. I can't speak on it right now because I don't know the details of that company. In terms of the industry, I can imagine Boeing maybe benefiting from any sort of war related stuff. America's always going to be at war with somebody. And I think Boeing had some trouble. It seemed like their planes were going bad for a while, but I can research that. So just leave it for next week. If the questions are shorter, it's easier to kind of sort of figure things out. But leave your questions and I'll answer them. If you want a more extensive consultation, like you want to talk to me directly face to face, I'm having a level up consultation on February 11th with 8 people, just 8 people. If there is a fee, the fee is $4.99. But it's, so if you feel like it's worth it, if talking to me face to face, pitching me your business idea, telling me specifically what's going on and getting a specific answer directly to you, is beneficial to you, then feel free to go to boycewatkins.com and you can click on the link at the top. This is more so for people that really want deeper insights into what you're doing with your business, what you're doing with your family portfolio, what your economic goals are. Maybe you're trying to be a content creator and you want my feedback on that. Just feel free to join us. We're going to do that. We usually sit for about 2.5 or 3 hours, and it's pretty good. Not pretty good. It's very good. Everybody loves it. So anyway, guys, I'm out of here. Have a great day, and I hope that this was helpful, and I love you guys, and I cannot wait to see you next week. So take care, and I'll talk to you soon. Bye-bye.